What up, everyone? Welcome back to another live trade breakdown over here at HPT. Today, we're going to be talking about losing trades and how to deal with them, right? So, to become a good trader, you have to become a good loser, right? You have to literally be able to hop into the market, right? Identify a repeatable edge, right? One that you rely on, one that you've proven that works, right? And you have to be able to execute that setup. And then when that setup does not go your way, you have to be able to walk away, right? Without feeling hurt, right? You can't let it disrespect you. You can't let it have a hold over your mentality, right? So today I want to break down, today is 10/3/2024. I want to break down some trades we took. I took 3 trades, 2 losers, 1 winner. And I want to show you, right? Because, I'm constantly breaking down the edge. I'm constantly breaking down great trades, right? And I want to dive more into losing trades, how we deal with them, and what we gain from losing trades, right? Because it's really important, right? Not enough people talk about it. Let me do this real quick. Let me share my screen. Okay, cool. All right, so let's dive into the price action, right? Let me just make sure that, yes, you can see this. Okay, cool. All right, so going into the day, right, we're going to first dive through the pre-market plan, right, our top-down approach and how the critical levels kind of guided us today. All right, so going into today, previous day low was a very important level, right? This was 56522. Why was it important? Well, if I whip out the larger time frame, you can see it lines up. Let me whip out that daily, right? The daily lines up perfect. What's this level? 5.6. What's the high on this? 16, right? So 5.616 was a very important level. Why? Because this was previous all-time high, right? So there was a lot of volatility at this level, and you could see yesterday we came in this level and we found buying, right? So this is why I'm obsessed with market structure. This is what market structure does for me, right? Look at how yesterday when price came into this level, literally look at how price reacted to this level, right? This isn't magic, right? We're not doing anything crazy here, right? We're literally just trading market structure on larger time frames, right? This was a trade we took yesterday. Beautiful trade right here off the cloud. It would be a price magnet, right? So if I could get the proper pre-market look, our first bearish target, right? Boom. Ding, ding, ding. The bell goes off, right? So now we whip out that 2-minute time frame. We're being patient. Price rallies above open print. We come down to open print. And we come up, we get a beautiful retest here off open print, green bar that has been ignored in the market short and our stops above OP, right? So check it out. We're getting in the market around 5.67 and our stop loss is at open print. We're risking 35 cents here to make a move potentially all the way down to this level, a $2 move. I have to take this. Right, guys, this is literally, hold on, let me put it over here because I feel like sometimes my face on YouTube's getting in the way, so I want to make sure you guys can see it. Back in a 2-minute time frame. Okay, this was our setup, right? Open print. We got the break below it, close below it. We come up, we get a green bar that's completely been ignored, right? Green bar ignored in the market short. Stop, right? Just like this, our stop loss is above open print. I take this trade constantly. This is my criteria, right? Notice we're below the 50. We're getting a beautiful chart pattern at open print. We're below open print. Sellers are defending open print. And more importantly, we got a higher low, right? We got a higher high. Now we got, a lower high, right? Here's a high, here's a lower high. This is all my criteria. We got in this and we got stomped out, literally on this candle, right? Now, let me ask you, does this mean that our strategy does not work? Absolutely not, right? Our strategy works constantly. Our strategy probably works around 70, anywhere from 70 to 90% of the time, right? Now, I know this because I log every single time I take this strategy, right? And then at the end of the month, I go back and look at it, right? Every week I go back and look at it, right? This strategy is my go-to, right? So the reason why I'm talking about this is it doesn't matter how good your strategy is, you're going to fall into losing setups, right? And you have to be like, okay, did I make myself vulnerable on this trade? This trade, I lost about 28%, right? I lost 28% on this trade, right? Did I make myself vulnerable? Absolutely not. Was I trading my whole account on one trade? Absolutely not, right? So it's very important that you abide by certain rules, right? So if you want consistent results in the market, you have to have a consistent approach, right? That being you're trading with specific size, you're stopping out at specific times, right? You're letting your winning trades go to a specific time, right? See, this is what we call over here at High Performance Trader your equation, right? So your equation's made up of three things, right? Number one is your strategy win ratio, right? Number two is how much money you make on your winners, how much money you need to make on your winners to at least break even, and then how much money you need to lose on your losers so that you do not lose money in this game, right? That's what I call your equation, right? The equation became very real to me when I started trading SPX, right? So SPX, I buy contracts around $800, and then I will only risk $200 to $250 per contract, right? Around 30%. Now, the reason why I do that way is because my losers are never more than $200 or $250, and my winners are always at least $200 to $250. That's my equation, at least, right? So my equation's around a 1-to-2, 1-to-3 risk reward ratio at all times. On this trade, this was much larger than a 1-to-3 risk reward ratio, because if price came all the way down to my target, that would have been more like a 1-to-4, 1-to-5, maybe even 1-to-6 risk reward ratio, right? Risking 200 to make 500, 600, 700, maybe even 800, right? So SPX really highlighted that for me. It helped me understand the importance of an equation, having an equation, executing your equation, and more importantly, implementing a system that stands behind your equation, right? And what I mean by that is having specific entry criteria and exit criteria. What's my entry and exit criteria? All right, well, number one is the green bar that was ignored, right? We get this green bar right here below open print, and it was ignored. What does that mean? That means sellers push price below the low of it, right? Now, that's my clear entry criteria. Where's my clear exit criteria? Well, if price breaks above this GBI, I'm out of this trade. I'm out of it, right? If price breaks that high, I'm out of the trade. Why? Because for this to remain bearish and to have a high probability of continuing to the downside, I do not want buyers to defile bearish structure at the high of this level. See, this is where candlestick analysis will serve you very well, right? So the longer you trade, the more you can realize, hey, if I'm in a short play here and this green candle opens well below open print and closes well above it, it's also opening below my moving averages and closing above them. This is what we call a bull 180, right? This is a strong indication that price is going to reverse and go up to end of day, right? Because we had the gap fill, right? This is literally a gap play, right? We gap down, end of days here, right? So just knowing that, right? Think about it. You short the market, you get stopped out on this candle, bring it back to the 50-50 perspective. If you have the correct knowledge and awareness of candlestick analysis and you understand what you're seeing right here, this is a great long entry to the upside, right? Because the market imbalance has an 88% chance of happening. What does that mean? Well, that means when the market looks like this, there is an 80% chance that price is either going to tag end of day or pre-market low, right? That market imbalance is the space between the open and the critical levels, right? That is an imbalance in shares, whether it's an imbalance in supply is greater or it's an imbalance in demand is greater, right? We don't know. We only know once we identify the chart pattern. Once we see the chart pattern, then we go, okay, based on this chart pattern, there is a higher chance that sellers are going to own this market imbalance, right? Because we got the break below open print, the break, the retest, the short, the GBI, right? So based off this, in my ability to read price action, I then put on this short, right? There's an 88% chance of market imbalance happening every single day, right? It's up to us to identify which way it's going to go. That's how I approach the market every single day, right? And when I do that, it alleviates so much noise, right? It gets rid of all that what if, right? Because what if don't mean anything. right? What if doesn't mean shit. What if doesn't make you money, right? Anytime you go, what if, you're not doing well, you're not managing risk well, right? Instead of what if, you need even if, right? Even if I take this trade, my stop loss is right here. So I'm only risking 30%. I'm not vulnerable. Even if buyers come in and defile this bearish structure like they did, even if that happens, that's okay because I have the knowledge to switch my position and capture the move to the upside, right? Doesn't matter. Stop with what if, start focusing on even if, right? So be able to approach every single trade, right? And be like, okay, if this doesn't work for me, why isn't it working? And can I use that information to do other trades, right? So that was our first trade. Our second trade, I then chased shorts again, right? And once again, we all fall victim to trading errors. I definitely did today. I kind of rushed into the second short play. I was trading off the 5-minute time frame. And we fell down back below open print. We came up, we retested open print right here. And I took the market short. Why was this a bad trade? Right? Well, Josh, I mean, I don't know. You're rejecting previous day high, you're rejecting end of day, right? It's really not a bad short play. And you're right, it's not. But there's one issue. Look at how far prices from the 9 DEMA, that blue line. That blue line right there, and I talk about this constantly, and this is why it stung today when I made this trading error. Anytime price is extended from this blue line, get ready for the snapback. What's the snapback? The snapback is when price is extended from that 9 and snaps back into it. Literally, that's what happened. Never enter in a trending trade when you're extended from moving average. Wait for it to hug. Look at this price action. We're hugging the 9. That's where you want to enter. Look at this price action. Look at this off open print, right? Come back above open print. When the market looks like this, I want to long it. Why? Because look at where the 9 is, right? And you get a beautiful RBI right here. Red bar right here, completely ignored, retest. Beautiful long play up in the end of day, right? So once again, what was wrong with this short play? The fact that I shorted it when there was this much space in between price and the 9. Every single time I do this, I lose money. So once again, we're back to, okay, I've taken a losing trade. What did I do wrong, right? Obviously, I entered when price was far away from a moving average. Very low probability of a continuation, right? So where I went wrong is I broke character by taking the short play in the morning and then trying to avenge my losing trade with this trade, right? Because I obviously we lost money here. So right here, I'm going, oh, my analysis was still good. This has to be the move I was looking for. Even though I'm completely aware to the fact that it's extremely low probability anytime you enter a play and price is far away from that moving average. I know this, and I still made that mistake. And this is the thing. I'm not beating myself up. I'm not killing myself. Yeah, I went for a 3-mile run, right? I went to the gym. I thought about it. I wrote it down. I journaled it. Tomorrow morning, I'll reflect on it. And then we live to trade another day. We cannot kill ourselves, guys. That's not the point. But you have to take accountability. That's why the Discord is so important, right? Once I made this error, I shout out to my veteran traders on the Discord, right? And obviously I told them, I was like, guys, this happened. You guys know it because, you're in the team with me. And then we go through exercises that build accountability, right? I'll talk to my traders every weekend about it, right? This weekend on the webinar, we'll break it down, right? That's the importance of being a part of the right team, right? And that's why if you're not part of a team, you should definitely get involved with the team, right? Click the links below and apply to HBT, right? We don't just take anybody, right? But if you're really ready to level up and join an army that holds each other accountable, especially in times like this, click the links. But yeah, so that was second trade. That was a loss. And then price just played around with open print all day. And then I finally entered back into the market short. Let me just see what it looks like. An SPX here. Yes. So notice here, 5-minute time frame, we come up, we reject the 50 EMA. Price looks like this, right? Then we get a nice GBI here on the 2-minute, right here. So I enter the market short right here at 5689. Short. Where's my stop? Initially, my stop on SPX I can count for around $5, right? Which is equivalent to 50 cents on SPY. But I really only need to keep it right here, right? Because remember, guys, we don't want buyers to defile bearish conditions, right? So if I'm in a short play, I'm looking to take a market short. Where do I not want price to go? Above that candle. Why? Because if buyers can push up past that candle, if sellers allow that to happen, they're not as strong as I thought they were. Got very close, didn't stop out, caught a very nice trade down to PDL on SPX, right? So once again, to wrap this up here, identify an equation that works for you. Understand that there's no person under the sun or no strategy. There's no golden strategy, right? Your strategy has value if you know how to trade it. And even here on this third trade here, I entered short and then price started to reverse on me. I was completely okay with taking a third losing trade. Why? Because I wasn't vulnerable. My equation was there. And I know 7 to 8 out of 10 times my edge works. I do not know which 8 times are going to work. All I know is I can't let myself be vulnerable and I have to execute when I see it. Right? So today was a very good day though. I solidified the belief that entering far away from moving averages does not work. It doesn't make sense on the 5-minute time frame. And I really energized the belief that no matter what, execute your strategy. Don't make yourself vulnerable and hold yourself accountable. Guys, once again, click the links below, get involved with HBT and level the fuck up. I'll see you in the next lesson.